So yes, that was an aggressive video title, but we have got to talk about these markets because we're seeing major shifts out there. So I'll let you guys know what I'm seeing and how I am looking to position myself moving forward. But before I get into that, I'll let you guys know we kicked off this week with a bang through the option plays that we've been making over at the Discord. Now today I closed up a bunch of them that were up over 50%, including this one. So check me out. This is one that was entered last Monday and today it was up 200%. And would you believe this is a call option play? So the stock was running even in this treacherous market that we are currently in. Listen up guys, there is a sweet science to options and I believe it's the best way to play the current market we are in, allowing you to win if a stock moves up or if a stock moves down. And yes, you can trade options if you're in the UK, and that's what I do on the daily basis. That being said, if you want to learn the art of options and get up on the moves and the plays that we make, ensure that you're hitting that top link in this video description to tap into our Discord. I look forward to seeing you guys over there. Alright guys, so to kick things off, we've got to touch on Facebook. That's ticker symbol FB. You would have seen the big drop on the day. Now pretty much the talk of the streets, I'm going to give you my 2 cents. Reason why they came down on the day is because a whistleblower came out. Now a whistleblower is just an employee, past or present, that divulges information on the company. That's exactly what she did. Spoke of practices within the Facebook organization that weren't for the public good, more geared towards profit generation. So you got to think what impact this could have on Facebook. It could lead to customers retracting from the business or for them having difficulty gaining the same momentum, the same growth of new customers coming on board. Could lead to further investigations into the company, could lead to fines, but also could lead to a shift in sentiment that we don't know how long that could last, right? A sentiment on the stock from the market. Now, does this surprise me? No, this isn't the first time we've seen Facebook in the middle of a situation and it won't be the last, right? Does it concern me for long term? No, this is still one of America's most powerful businesses. Got to understand, they pretty much got a duopoly on the advertising space alongside Google. It's the short term that is the concern. Now check this out, okay? Now if you guys remember the last time we spoke about the Facebook stock, I put a play on your radar. That was the 3x triple leverage short position, and that is up 15% today, given we saw Facebook drop 5%. Now in total, we've seen a corrective move of 15% in the Facebook stock. Currently, they're bubbling around their 200-day moving average. Told you guys it would act as a level of support. You might get a bit of tug and pull from the sellers and the buyers at this level. Now the question is, am I a buyer here? No way in hell would I pick up the Facebook stock right now, given the fact that they're still clouded by a lot of different issues that need ironing out. And I want to see how they perform on earnings. Given they've already come out with a pre-earnings warning, I want to see how that filters through to their results, what their guidance say, and how the market reacts to that. Now, that being said, if we were to see them drop through that 200-day, I would expect the velocity of the fall to ease up, but I believe that 250-day moving average would come into effect, and that's at the lower 300 level, around that 315 mark. And that was the low that they bounced off back in January, right? That was the low. That was the 250-day moving average. So that is how I see the Facebook stock. That's how I would play it. This is one where I'm hands off, just on a watch to see what they're doing. And I believe the put holders are still in control at this level. Again, you are going to get that tussle. You might get a couple of dead cat bounces and move upwards in the stock, short-lived rallies, just for it to come back down, as they've given the fact that they are dealing with a lot right now. Now, Facebook collectively, alongside the other mega cap tech plays like your Apple, your Microsoft, your Google, play a massive part in market stabilization, but also momentum, just given how much they take up of the SPY. As I told you guys, the SPY right now is pretty much governing what most of the market is doing. So if the SPY moves down, the rest of the market is likely to move down with it. Vice versa, if the SPY moves up, the rest of the market is likely to move up. That being said, let's do a check-in on the SPY. Last time we spoke, they were bubbling around that 100-day EMA. You guys can see they've clearly broken that now. And next support is likely to be that 200-day EMA in the lower 400 levels, around that 415 mark, okay? Now, again, there's a lot hanging over these markets, whether it's the ever-growing situation, whether it's the inflation, the debt ceiling, the corporate earnings, given the fact that they've got strong comps to compare to this time round, there's a lot that could push the market further down. Now that creates massive opportunities. So that being said, what do I plan to do? Well, I'm not just going to be out there in the markets buying these dips, buying these dips, buying these dips for them to potentially keep on dipping. What I'm going to be doing, at least for the short term, is utilizing the power of options through the different strategies that are available, like one being covered calls. So those plays have got great positions in my portfolio that I don't mind releasing. I'm going to go ahead, set my covered calls on them, get that upfront premium, and because I expect the market to continue to be choppy, I'm not expecting them to hit those strike prices, so I could just have that on repeat. Another is to be buying puts selectively out there on the markets, and we've been doing phenomenally well on those, like our Macy's put that hit a 70% return, but then also to be selling puts on plays that I want to hold long term, but it's an alternative for me to just go out in the markets and buy the dip. So I could just go ahead, sell that put at attractive strike prices where I don't mind getting into the play and holding long term, collecting that upfront premium. Like combined, that's a phenomenal way to navigate the current markets that we are in. As always, guys, if you want to get up on the plays and moves that we make, exercise some of these strategies, hit that top link in the description, tap into the Discord. Look forward to seeing you guys over there. All right, guys, that wraps up this one. If you've got any questions for me, drop them down below and I get back to you. On your way out, make sure you guys like that comment section for me. If you're new, join the movement by hitting that subscribe, and I catch you guys in the next one.